Hi there, this is Mr. Evans. This video is on setting financial objectives. Getting into the content now, and this is just an introduction looking at these different financial objectives. So what are financial objectives? So this kind of definition, the first part of each of these units, looking at the different functional areas, is always about, okay, so what are the operations objectives, what are the marketing objectives, what are the objectives related to human resources. In this case, it's financial objectives, and the definition is always about the same. Financial objectives are specific goals set in relation to the management of an organisation's monetary resources that will enable a company to achieve its corporate objectives. The key thing to remember is that the objectives are set by the management and leadership of a company, and then from there, once we know what the organisation wants to achieve, what its big goals are for the year, then we can begin to break that down for each functional area, so that each functional area is clear on what they need to do to enable the company to achieve its corporate objectives. So it's the process of breaking down big corporate objectives into a financial objective for the finance department to work on. This is an example I've used before, but let's just say we've got the corporate objective of expanding overseas. So that's our big goal. What's the operational objective? Well, we're going to open a new factory in India. What's the marketing objective? Well, we want to make sure we've got a market there, so we're going to launch an overseas advertising campaign. And if we're going to be dealing with a new factory in India, then maybe all our staff will need language and culture training. What might we set as a financial objective? Well, it may be for the Indian factory to break even in its first year of operation, or it may just be we set a budget for expenditure on the new factory which we don't want to exceed. But the point is that all of these objectives, should we achieve them, should help contribute to this overall objective of expanding overseas. So what's the value of setting financial objectives? Well, it will enable us to achieve our corporate objective. Organisations are driven to achieve their corporate objectives. Setting good financial objectives is going to allow us to do that. Financial objectives help to set clear budgets, which allows for decisions to be taken about resource allocation. So by setting clear financial targets for each department, it enables the managers and the workers within that department to know what constraints they're operating within, which can help them make decisions that are going to benefit the business. Setting financial objectives creates clarity and purpose. Everyone knows what they're trying to achieve, which should be quite motivational. It also allows success to be measured and reviewed. Once we've set our objectives, they should be clear enough that at the end of the time period that we've set for them, we can go back and review them. And then we can go through the process again of setting future objectives. Final bullet point here. Clear objectives may help the business to secure external finance, say for example bank loans or investment. Showing the bank manager that we're going to set ourselves the objective of paying off the loan within 3 years, and we've got clear reporting systems, accounting systems to help us do that. Then it's more likely that the bank will consider the business to be well managed and lend the money that they want. So that is the value of setting financial objectives.